All right, let's dive right into this. Welcome to today's Explainer, where we're taking a super focused, heavily data-driven look into the exclusive pre-IPO space. Today, we are breaking down the core fundamental numbers behind Polymatech Electronics Limited. If you're the kind of person who loves uncovering a company's real metrics way before it hits the main stock exchanges, well, you are in exactly the right place. We're pulling our data today directly from Securities, a real veteran platform in the unquoted market, to give you a clear, highly structured look at what's actually going on with this company's valuation.
Here is our roadmap for the Explainer today. 1. The unlisted share market. 2. Introducing Polymatech Electronics. 3. Core fundamental financial metrics. And finally, 4. Trading Polymatech unlisted shares. Okay, let's jump straight into Section 1, the unlisted share market. Discovering pre-IPO opportunities. So to set the stage, what exactly is an unlisted share? Simply put, these are shares traded completely outside of the traditional, formal stock exchanges, like the NSE or BSE. They can be illiquid, sometimes they're delisted, or, in the specific case we're analyzing today, they're pre-IPO. Now, they are still traded and often held in standard DMAT form, just like your regular everyday stocks, but the actual transactions happen over the counter through specialized, dedicated platforms. It's really a unique space where early-stage investors go looking for value before a broader public listing happens. And you know, when we are looking at data in this somewhat hidden space, the source is absolutely crucial. The numbers we're breaking down today come from Securities. And these guys aren't new to this. They boast a serious 30-year track record in the unquoted and illiquid markets, and they're actually among the founder members of the unquoted stock market in India. But what's really compelling here is their history of identifying early-stage companies that eventually exploded onto the public markets. We are talking about true multi-baggers. Pre-IPO successes like DLF, DMart, Nazara Tech, and L&T Infotech. Having that kind of veteran perspective behind the data definitely gives a lot of weight to the numbers we're about to dive into. Moving right along to Section 2, introducing Polymatech Electronics, the target asset. Meet Polymatech Electronics Limited. Now, for all you financial researchers out there who demand absolute precision, their verified ISIN code is INE0OLN01011. That unique alphanumeric code ensures we are looking at the exact right financial instrument. They operate in a highly strategic sector, and as you'll see in just a moment, their financial footprint is already massive, even though they aren't actively trading on the main public boards yet. All right, Section 3, Core Fundamental Financial Metrics, by the numbers. The raw data here brilliantly illustrates the sheer scale of this company right out of the gate. We are looking at a market capitalization of 3,506 crores. Now, I know when a lot of people hear unlisted or pre-IPO, they kind of picture a tiny garage startup. But a market cap of over 3,500 crores? No way. That signals a massive, established enterprise with some serious operational scale. It sets a very specific baseline expectation for the rest of the fundamentals we're going to review. But, hey, sheer scale doesn't really mean much without profitability, right? Well, look at their EPS, earnings per share, sitting comfortably at 9.43. This is such a vital indicator. It basically tells us that for every single share of the company, they are generating nearly 9.5 rupees in net income. In the unlisted space, finding a company with strong, positive earnings per share is a huge green flag. It tells us the core business model is currently generating real, tangible profits, not just rapidly burning through venture capital. Actually, I think this next metric might literally be the most exciting piece of data in our entire explainer today. The debt-to-equity ratio is a microscopic 0.04. Just think about what that actually means. A ratio of 0.04 indicates that Polymatech relies almost entirely on its own equity to fund its operations, rather than taking on heavy, burdensome loans. In a capital-intensive industry like electronics, having near-zero debt is incredibly favorable. It drastically reduces their financial risk and gives the company massive flexibility to weather economic downturns or to aggressively invest in new growth without being crushed by interest payments. Next up, we have the book value, which comes in at $31.97. Book value is basically the intrinsic net asset value of the company on a per-share basis. So, if you were to magically liquidate the entire company today, sell off all the assets, and pay off that tiny sliver of debt we just talked about, this represents what would theoretically be left over for the shareholders. It provides a highly useful baseline for investors trying to evaluate whether the current trading price in the unlisted market makes logical sense. And speaking of trading price, if we look at the price action over the last year, the 52-week high reached 105, while the 52-week low dipped down to 40. This spread gives us a really fantastic snapshot of the asset's volatility, as well as its potential ceiling. It clearly shows that the market has, within just the last year, been willing to value these shares well over the 100 rupee mark, which definitely reflects moments of high buyer enthusiasm or positive internal developments.
Let's move into our final section, Section 4, Trading Polymatech Unlisted Shares, the Mechanics.
So how do you actually transact here? Well, the parameters are pretty strict. While the face value is $2, the absolute crucial metric you need to watch is the lot size of 500. In the unlisted market, you generally cannot just go and buy a single share like you might on a normal brokerage app. You have to buy in predefined blocks or lots. So any transaction for Polymatech requires trading in multiples of 500 shares. Oh, and the total number of outstanding shares is also massive, just over 398 million shares, which, if you do the math, perfectly aligns with that huge 3,506 crore market cap we discussed earlier.
Which naturally brings us to the current pricing, breaking down the bid and ask spread. According to the ARM's Securities platform, the current buy price is set at 45 rupees, while the sell price is 55 rupees. This 10 rupee spread is actually quite common in unlisted, illiquid markets. Market makers need to account for the risk of holding shares that can't just be instantly dumped onto a public exchange. So if we do some quick math using that lot size of 500 we just learned about, acquiring a single lot at the buy price of 45 would require an initial outlay of 22,500 rupees. That really builds a complete, transparent picture of exactly what it takes to take a position.
So let's tie this whole shebang together. We've looked at the data, we've seen a company boasting a massive 3,506 crore market cap, generating a solid earnings per share of 9.43, all while maintaining a remarkably safe, near-zero debt-to-equity ratio of just 0.04. When you look at the raw fundamentals, it paints a very, very compelling picture. The ultimate question you have to ask yourself is this: based on these verified metrics, does Polymatech have the underlying strength to be your next pre-IPO multi-bagger? The numbers are absolutely there. Now it's your turn to do the research. Thanks for joining me on this explainer, and keep learning.